Hi there, welcome to kneppyinvests. I think it's time to talk Australian Clinical Labs because this company has released 4 profit upgrades for the first half of financial year 22 since August of this year. So that's over a 4-month period. They've released 4 profit upgrades. Now these profit upgrades in themselves haven't been insane, but when you look at or compare their original forecast for the first half of this financial year to the most recent upgrade, the difference between the two is insane. And the reason the difference between the upgrades or the forecasts is because this company has been experiencing, or is experiencing right now, significant tailwinds behind it, and that has led to significant increases in their expected profit and revenue. And the question we have to ask ourselves as potential shareholders or current shareholders is, how long are these tailwinds going to continue? Because they most definitely won't continue in the long term. So before we have a look at these profit upgrades, just a few facts in regards to this company. The reason Australian Clinical Labs is facing lots of tailwinds behind the business is because they are a pathology services company and they do a lot of COVID-19 testing. And there's really high margins in COVID-19 testing, probably ridiculous margins. But Australian Clinical Labs is one of a few ASX listed companies that are benefiting from this. And those other 2 companies are Sonic Healthcare. I think the other one might be Helios. Correct me if I'm wrong on that. But there are definitely 3 companies that are experiencing some tailwinds behind it. And Australian Clinical Labs is one of those companies. This company was founded in 1987, and until they were listed on the ASX on the 14th of May 2021, they were held by a private equity company. And whenever I see a company spun out of private equity onto the ASX, I become quite wary because a lot of times private equity will try to make a company more profitable than they actually are. So I'm very wary when I see a company list on the ASX that comes through private equity. But that private equity company, Crescent Capital Partners, still has 19% holding in this company. So there is a bit of interest still there in regards to the performance of this company over the medium to long term. Current CEO of Australian Clinical Labs is Melinda McGrath. She's been in that position since 2015, and she also has a 1.4% holding in the company. Current valuation of Australian Clinical Labs, $1.2 billion. That's a share price of $5.99. And when you compare that to their expected profit just for this first half, you might think there is some value there. And I'm going to talk about this during the video, but the market does not expect these tailwinds to continue. They don't expect the performance, the financial performance of this company that they're experiencing in this first half of this financial year to continue. That's why you might see some value when they actually do release their first half year results in February next year. So don't fall victim to that. You have to take into account these tailwinds behind this company. And the ticker code behind Australian Clinical Labs is ACL. Now, I am a shareholder of Australian Clinical Labs. I did buy in because of one of their profit upgrades, but I was a little bit wary of this company just when they listed on the ASX. And one of the reasons I was a bit wary of this company is when I went back to the 2018 and 2019 financial statements, there were some significant red flags there. And most definitely, if this company wasn't experiencing any tailwinds, I would not be a shareholder of this company at all. So if we go to the statement of cash flows and look at the operational cash flow of this company in those 2 financial years, I would be running away from taking a position in this company. For instance, they received $448 million of receipts in 2019, but were only operational cash flow positive by $1.7 million. Now you might say that's 1 year in isolation, but if you go back to 2018, receipts to customers was $378 million, but they were only cash flow positive in operations by $4.7 million. So for some reason in 2018 and 19, this company did not have very high margins. And those high margins or lack of high margins have been, I won't say solved, But because there's really high margins in COVID-19 testing, we are going to see this company produce prodigious amounts of cash in financial year 22, particularly when they release their first half results. And 2018 and 19, they were actually free cash flow negative because capital expenditure for both years was significantly higher than the operational cash flow. For instance, in 2019, they spent $14.4 million on purchase of property, plant, and equipment, which is capital expenditure, which means they were highly free cash flow negative. And maybe this was one of the reasons the private equity company decided to list this company on the ASX to bring more capital into the company. Though I mentioned Australian Clinical Labs have released 4 profit upgrades, technically it's 5 profit upgrades because the first upgrade the company released was just after they listed, and that upgrade was released on the 3rd of June 2021, about 2 weeks after they listed. And this profit upgrade was not for the first half of financial year 22, it was for the financial year 21, and they were expecting a significant increase in profit, a 10% to 15% increase from the prospectus forecast. So this was the first sign that there was a little bit of tailwinds behind this company. This was back in June of this year. Now to the upgrades the company released for the first half of financial year 22. And the first upgrade was released when they issued their financial year 21 results on the 24th of August 2021. This was about 2 months after the financial year started. And this was a significant upgrade when you look at the expected numbers for profit, comparing from the prospectus forecast to this upgrade. You'll also notice the difference in the percentage increases of revenue compared to profit after tax. So for instance, they expected revenue to be between 18 and 22% higher than the prospectus, but for profit, they're expecting that to be between 109 and 130% higher than the prospectus forecast. So why is there a much larger expected increase in profit? It all comes down to margins. And COVID-19 testing has pretty high margins, and the companies that do those testings are benefiting from that. And that's why whenever you see a significant increase in testing when it comes to COVID-19, companies like Australian Clinical Labs will really benefit from that, because the more revenue they can generate from COVID-19 testing, a lot of that will go down to the bottom lines in increasing revenue and increasing cash flow. The second upgrade the company released was only 1 month later, on the 28th of September 2021, and this was another significant increase, particularly in regards to profit. So now they expect profit to be between 64 and 70 million, which was almost 200% higher than the prospectus guidance they gave us during the IPO process. And you can see revenue was now expected to be between 30% and 35% higher. So nowhere near as high as the profit expectations in terms of percentage increases. A really interesting market reaction to this upgrade. Share price opened higher at the day. In fact, the share price went above $5 for a brief period in the first hour of trading, but then a lot of selling came in, and that selling pushed the share price from $5 to $4.70. And then over the next 2 weeks, share price fell from $4.70 all the way to $4.10. I think the market was telling us that they expected this upgrade, but these tailwinds behind the company were coming to an end. COVID-19 testing were going to tail off, were going to fall away over the next few months. But the market was completely wrong. The market did not expect Omicron virus to play havoc all around the world, including Australia. And then 1 month later, during the AGM, they released upgrade number 3. And now they expect profit to be between $86 and $95 million, which is a significant higher number than the prospectus forecast for profit, which was only expected to be $23 million. So you can just see the tailwinds of COVID-19 testing just by looking at profit expectations for this company and the difference between the prospectus forecast and this upgrade number 3 forecast. And finally, upgrade number 4, released on the 21st of December 2021. And when you compare this upgrade to the previous upgrade on the 27th of October, it was another significant upgrade. And now they expect profit to be between 116 and 128 million, and revenue now should be higher than 500 million. So a significant upgrade from not only the previous upgrade, but also the first upgrade released in August, and particularly to the prospectus forecast they released during the IPO process. So now let's have a look at the difference between the prospectus forecast and the most recent upgraded forecast they released on the 21st of December. And when we look at the difference between the prospectus forecast this company released during the IPO process and the most recent upgrade they gave on the 21st of December 2021, maybe you can understand why I'm calling these upgrades insane, particularly when you compare the expected profit they released in the prospectus to the expectations for profit on the 21st of December 2021. Going from 23 million now to expected profit to be between 116 and 128 million is simply insane. Even the revenue difference going from 307 million to now 500 million is also insane. But we do have to be careful right here. The reason there are significant differences between the prospectus forecast and the most recent upgrade is because of these tailwinds behind us, because of the increase in testing when it comes to the Omicron, and because we are opening up. And at some point in the future, and this is where it becomes difficult because we don't know where this point's going to be, testing will start to fall away. And it could fall away quite significantly. But the problem is we just don't know when that's going to happen. I doubt that this company knows when that's going to happen. And when it does happen, there is potential the share price of this company will fall off by quite a bit. But thankfully, the market hasn't overreacted to these upgrades, because if you look at the profit for this one half, so this is only a half year, of 116 to 128 million, and then say someone came along and said, well, in the second half, you could maybe assume they will have similar numbers. So that puts the profit to be almost $250 million. And then if you take a logical view that the profits will continue to rise over the next 5 to 10 years, so we'll put a P/E ratio of about 15 to this company, that would give us a market cap of this company, or value of this company, over $4 billion. But the valuation of this company right now is just above $1 billion. So the market has not overreacted to these upgrades. The market knows these good times for Australian clinical labs won't continue for infinite amount of time. It will come to an end. And the market is actually acting quite rational right now. Now onto the chart, daily chart for Australian clinical labs since they listed on the ASX way back in May of this year. Share price back then was in the mid threes, so between about $3.30 and $3.60. We did see a little bit of nice price action from July all the way through to October. Share price increased from $3.40 to about $4.50. I took a position at some time during that uptrend. And then we had that upgrade in September 27, and that odd reaction from the market where the share price opened at about $5, fell to $4.70, and then over the next 2 weeks, share price fell from $4.70 to $4.10. In fact, it fell almost to $4. During that period, I was still a shareholder. I thought maybe I had made a mistake, but I thought, and remember, this was pre-Omicron, so there's a lot of people in the market thought COVID-19 was coming to an end. We're going to open up, testing will go down, and companies like Australian Clinical Labs will not have any tailwinds behind them. But the market was wrong, and you can see that with the share price action of this company over the past month. In fact, the share price has increased from $4.20 to a current share price of $5.99 through December, and the majority of this positive price action is just the massive increase in testing because of COVID-19. There's also the potential that the company will release further upgrades, and it's going to be interesting to see if they do release financial year 22 forecasts when they release their half-year numbers in February. Potentially they might release some expectations before that, but there is potential, well, I won't say potential, but it's going to be interesting to see if they expect these sort of testing numbers to continue. I'm not sure they know, because I don't think anyone knows how long we're going to see testing like we are seeing now continue. Maybe we'll see what happened during the Spanish flu, where it just went away and there'll be no need for testing after that. And if that happens, more than likely we'll see the share price fall off a cliff quite quickly. So I think this is not the sort of company you buy in, put in your drawer, and don't pay any attention to any further. You do have to pay close attention to the share price action, to how the market is reacting to testing, and preferably daily testing. If we start to see daily testing of COVID-19 fall away quite sharply, that could be the time to sell out of your position of this company. So I'm keeping a close eye on all those things right now with this company, because this is not a long-term company I'm going to be holding. This is only for a short-term trade. And at this point in time, because the share price action we've seen during December, a lot of positive sentiment behind this company, I'm happy to maintain a holding, but I have this company on a short leash. And if that short leash comes off the dog, that's the time to sell this company. And that's all I have for this video on the 4 profit upgrades for Australian clinical labs. You can call that 5 upgrades if you include that first upgrade released in June. And when you add up all these upgrades and compare the original guidance to the most recent guidance, you have to call it insane upgrades over the past 4 or 5 months. If you do have any questions about this company or any of the profit upgrades, the future of this company, maybe you completely disagree with me that as soon as the good times end for this company, potentially you should think about selling out of this company. If you think there is long-term potential behind Australian clinical labs, I'd love to hear your opinion. I'd love to hear differing opinions than my own. So leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.